Hey guys, what's going on? My name's Adam, and we have some insane updates for NAT. So I'll just get right into it. So on Thursday, yesterday, the NAT spot price for their Suezmax vessels was 9,200. So basically, how much a company has to pay to put their oil on Suezmax vessels. And NAT owns 23 Suezmax vessels. They don't own any other VLCC, which are very large carriers. Um, And so again, the 10-day trend was just trending lower and lower. However, on Friday, so today, news, the Potent Partners daily briefing came out, which talks about the spot rates for different dirty crude carriers. And all of a sudden, it jumped to close to 19,000. Right? Look here, it's like 18,900 on Friday. Okay, um, as compared to 9,200. Okay, so that's more than two times the price from Thursday to Friday, okay? And again, you look at the 10-day trend, and this spike over here represents, again, the spike from Thursday to Friday and more than double increase in the spot rates, okay? So again, this is good news for NAT because now they're earning more money from companies who are putting their oil on their fleets. And I mean, just as a reference point, it costs around $8,000 just to keep per day to keep their vessels going. So again, that's a good sign because now they're earning around like $10,000, 900 in profit, right? And so the average for this week, and you can find this information on NAT's investor relations website. Um, so for this week, the spot rate was 12,400, which was up from last week. So again, some good news, and you can see the general trend here. And the general trend as it comes into the fall and winter is an increase in the spot rates, right? So not only from a very good year so far in terms of the spot rates, um, we can see coming into the winter there should be more good news for NAT, and the spot rate should only increase, right? So I'm pretty excited for NAT's Q2 results to come out, and I'll be doing an in-depth analysis. I believe the results come out in mid-August. And again, as you all know, I'm an owner of NAT, and as well their dividend is coming out as well. So, and I believe that's like 20 cents per share, which is pretty good. That's like around 10% right now. Okay, and so I was thinking of why was there such a drastic increase from 9,000 to 18,900 day over day? Because that something like that usually doesn't happen. And I found it also interesting that it's like more than the VLCC spot rate. The spot rate for VLCC was 18,600, right? And also the spot rate for VLCC trended lower from 30,000 to 26,000. And the reason why VLCC is higher than Suezmax is because VLCC carries 2 million barrels of oil on their ships, while the Suezmax vessels carries only 1 million barrels of oil. Okay, and so I was thinking of why this is this upward trend, and it could be a couple of reasons. One is just because of the general spot rates tend to increase and decrease day over day and week over week. Um, but however, there are some concerns, and we'll explore these. So first one is oil losing momentum as crude inventories rise, and as you know, Suezmax vessels store crude oil. And as inventories rise, more companies are pushed to store their oil on vessels like Suezmax vessels and VLCC vessels. Okay, so oil is under pressure as crude inventories increase by 4.9 million barrels, while U.S. oil production grew to 11.1 million barrels per day. So U.S. oil production is increasing, but as we also see here, the amount of oil that's being demanded fell because of virus concerns, and also weak U.S. job numbers. So oil prices fell on Thursday as investors worry the U.S. Congress may not agree on a stimulus package, and I have a video on that as well on the new upcoming stimulus package. And jobless numbers rose, while analysts are prepared to cut energy demand forecasts as the number of virus cases surges higher. Right, and when the cases surge higher, more of the states go into lockdown, which basically means that inventories of oil are going to rise because there's going to be less demand for oil, which is a good thing for spot rates. Okay. Other news is that oil prices edge lower on U.S.-China tensions. So if oil prices are low, people or companies may want to store their oil to wait for oil prices to increase. And what happens when companies store oil? Well, again, that increases spot rates because storage places fill up, and so they move to storing their oil on floating vessels, such as Suezmax vessels. Okay, so again, just to recap, what happened with NAT stock this week? We'll refresh. It's close to 4 p.m. right now. It's down on the week by around 4%. Again, I don't know why that is. I think if anything, these news are good news. I mean, sure, the spot rates were relatively lower for the first part of the week, but again, they significantly increased, and their average is 12,400 up from last week in terms of the spot rate. And of course, like NAT contracts out their vessels for the foreseeable future, so they already contracted out most of their days for Q2 at a much higher spot rate than just 12,400. Okay, so that's pretty good news for NAT, and I'm excited for the Q2 numbers. Again, I should have bought. NAT rate was pretty low, like around here when it was around $4. I was waiting for it to hit $4 before I bought in, but unfortunately, you can usually never time the market. But again, it's trending downwards, and hopefully, if it trends downwards even more and it reaches, that $4 mark, again, I might jump in. And just one more thing, one summary I wanted to share with you guys of why the tanker markets are generally on decline during July. This news article says it really well. So the tanker market was in reverse mode during the month of July, according to the latest report from OPEC. Dirty tanker rates, which Suezmax is a part of, broadly trended lower across most routes in June, as a stellar rates seen earlier in the year receded. And so the decline in rates was driven by production adjustments from OPEC and other companies to address the oversupply in the market, increased tonnage availability amid the gradual unwinding of floating storage, and lower import needs globally as product demands remains relatively weak. Okay, and so similar factors have kept these spot freight rates muted in June, and sort of going into July. Okay, so that's basically the update I have for you. And if you enjoyed that, please give it a like, subscribe, and I hope you have a fantastic weekend.